Hello traders, I'm Miroslav Popov, the author of Forex Strategy Builder Professional. In that video, I'll speak about indicator properties. A strategy consists of indicators. The indicators are put in that strategy slots here, and we have four types of slots: opening point of the position, opening logic condition, closing point of the position, and closing logic condition. If you want to change indicator properties or indicator, we click on a slot or on that button here for adding logic conditions here or here. When you click on a slot, a panel will appear here at the left side of the screen. This panel is the indicator properties panel. The panel is different for each slot type. I'm going to use a presentation in order to go step by step. The indicator properties dialog panel represents each particular slot type. So, when you click on a slot, the panel here represents the particular slot type. For example, when I click here on the indicator properties, this panel represents the indicators that can be used only for the opening logic conditions. If I click on the opening point of the position, the indicators shown here in that list are all that can be set in the opening point of the position slot. So I cannot make mistake. Even I can have one indicator, for example moving average. Moving average can be used for an opening point of the position, but it has here one set of parameters, and moving average can be used also as opening logic conditions. Moving average. But here it will has different set of parameters. Here in that panel is divided in several parts. This is the search box. We can search an indicator, for example MACD. When we start typing here, the indicators are filtered. When I select an indicator, I see the properties for the selected indicator. Let's see the next topic. Strategy is calculated in real time. When I am working with the indicators properties and when I make some changes, the program automatically recalculates the strategy. It is not necessary to click a calculate button or to make something other. Everything is calculated in real time. Closing and reset buttons. This panel has four buttons for controlling. I told you that the strategy is calculated at real time. So when I close the panel, the strategy will remain. I can close the panel using that here accept changes button. That button simply hides the form like that. But we have here standard buttons OK and cancel. You may find more convenient to use that buttons here. The OK button accepts the changes like that, and the cancel button cancel the changes and return the strategy to the previous state. For example, if I want to add opening logic condition, I can press the button here, the opening logic condition is add, but if I cancel that opening logic condition slot will disappear. And the last button here is a reset button. If I made changes to the strategy, to an indicator, the reset button returns all parameters of that indicator to the default values. The next topic is indicator logic rule. The logic rule represents the way we are using an indicator. These logic rules are available for all indicators, and they are different for each strategy slot. Every indicator has a logical rule, or this is the logic of application. That logical rules are different. For example, if we are using I'm now in the opening point of the position slot, and let's set here, for example, bar opening. In the opening point of the position slot, we set the price at which we open a position. So the application here, the logical rule, will tell us when or how to open the position. For example, we have here enter the market at the beginning of the bar. So we open a position at the price opening. This is specific for that indicator. Each indicator has a each own logical rules. For the opening point of the position, the logical rule represents the entry price. There are two types of indicators. These indicators can represent one entry point or two entry point or entry prices. For example, bar opening indicator has only one entry price. This is the first price of the bar, and the logical rule is enter the market at the beginning of the bar. The same is for the bar closing indicator. It also represents one entry price or entry point. Enter the market at the end of the bar. This is the last tick of the bar or close price of the bar. But some indicators, for example, Bollinger Bands, has two entry points. We can enter long at the upper band or enter long at the lower band. We know that we set only rules for long position, and the program makes the opposite rules for the short positions automatically. So when I set here enter long at the upper band, that automatically means that the short entry will be at a lower band. When I return to the indicator, opens long position at the upper band and opens short positions at the lower band of the indicator. How we can distinguish the indicators that has one entry price or two entry prices? For example, these indicators, bar closing and bar opening, has one entry price, and the logic rule is enter the market at the end of the bar, enter the market at the beginning of the bar. So the entry rules start with enter the market. But for indicators that has more than two entry prices, for example, the logical rule is enter long at upper band. Here is enter the market because the opening has one price. Donchian channel has two prices. Enter long at upper band. And we can select, for example, enter long at lower band. The next is the opening logic condition slot. The logical rule for that slots represent statements. That statements can be evaluated to true or false. Let's set here Bollinger Bands, or no, let's be moving average, for example. So we enter the market at moving average, but we are not trading because the trading direction is not determined. And here are coming these opening logic conditions. They determine the entry directions. So that the logical rules are true or false. When the logical rule is true, that means it means we will enter long. When the rule is, for example, that rule, AC false, when it is executed, when it is satisfied, we will enter long, and when the opposite condition is satisfied, we will enter short. Here we have more rules than what we have had in opening point of the position, but each of these rules can be evaluated to true or false. The next is closing point of the position slot. The indicators put in closing point of the position slot represent exit price, the price where we close a position. And there are two types of indicators also that represent one exit point, or they can represent two exit points. Let's see, bar closing represents one exit point, exit the market at the end of the bar. The other type of indicator is a Bollinger Bands, for example. It has 2 points for exit long at upper band or exit long at lower band. We are choosing at what point, at what price we will close a long position, and the program will close the short position automatically in the opposite rule, in the opposite band. When we have bar closing indicator here in the closing point of the position slot, we can use closing logic conditions. For the closing logic conditions, the logical rules are also statements that can be true or false. And the principle is the same. When the rule is satisfied, we are closing a position. When the rule is not satisfied, we do not close the position. That rules are also, we set the rules for the long position, and the program makes the opposite rules for the short positions. The next is smoothing method. Most of the indicators are using moving averages or different kind of averages or averaging, and these moving averages can be calculated in several ways. For example, we have Forex strategy builder uses four formulas for calculating moving averages. These are standard formulas. You can find more information on the net. I am not going here on details. The formulas are simple, weighted, exponential, and smoothed moving average. Even if you are using an indicator that is not strictly determined as moving average, that indicators most probably is using some kind of moving average. For example, Bollinger Bands indicator. Bollinger Bands uses one moving average and calculates the upper and lower band as a distance from that moving average. And that indicator also has a smoothing method. You can see here the smoothing methods: simple, weighted, exponential, and smoothed. This accelerator oscillator also has the same smoothing methods. The next is base price. Open, high, low, close. These are the four prices that determines the bar. Also, we can use median price. It's equal to high plus low divided by 2. Typical price, high plus low plus close divided by 3. And weighted price, high plus low plus double close price divided by 4. Period. The period is number of bars used for calculating of an indicator. For example, if you have a moving average 14, that means that moving average you use 14 bars to be calculated. Moving average is actually the sum of the last 14 bars. For example, the closing price of the last 14 bars divided by 14. So we need 14 bars in order to calculate the moving average. But here another concept appear. We need 14 bars to calculate the moving average, but actually we are using these indicators to produce different signals, and sometimes we need more bars in order to calculate the signal. And here comes the first bar. I'll show you now what I mean. For example, if you're using moving average for entry, for opening, and moving average has period of 14, at the 14th bar from the beginning of the data series, we have a moving average value, so we can enter a position at that moving average. But if you're using moving average as opening logic conditions, for example, let's go to moving average. Oops. Moving average. Let's use moving average with period 200. So I need 200 bars in order to calculate the moving average. But here I have a logical rule. Moving average rises. So I need at least 2 points for 2 bars in order to determine if the moving average rises or falls. So I will need minimum 201 or 202 bars depending on the logical rule. For example, if I am using moving average, what I have here, let's use momentum for example. I have momentum changes its direction upward. So I need here 3 additional bars, 3 momentum values in order to calculate if momentum, to determine if momentum changes the direction. And let's set, for example, 200 for the momentum. I have here 2565 bars. These are the bars available in the historical data I'm using for the backtest. But if I see here the statistics from the backtest, where are the number of bars? The tested bars are 2362. So from 565, here I have 362 bars. So the calculated bars, the tested bars are with 203 less than the data I have. That's actually the first bar. The first bar is for that case 203. The actual calculation starts 203 bars after the first bar of the data series. Later we have vertical shift and horizontal shift. What is the specific vertical shift? The vertical shift is measured in points, and when the vertical shift is positive, it moves long entry up. Accordingly, it moves the short entry down. And when the vertical shift is negative, it moves long entry down and a short entry up. This vertical shift is used mostly in the opening point of the position, and it is used to shift the entry price with determined number of points. For example, let's set here entry at fractal. The fractal has two opening points, up fractal and down fractal. By default, the vertical shift is 0. I told you it's set in points. Let's see what we have in the indicator chart. This is the, for example, this is the level of the up fractal price, and this is the down fractal. We enter long at the up fractal and we enter long at the down fractal. Exactly. This is the signal. The signal is at the exact indicator value. But if I'm using vertical shift, for example, let's set 100 points. We always set the shift in points. That means I'll move the vertical shift, the long entry 100 points upward, and the short entry will be 100 points lower than the indicator value. Let's return to the chart. Now we see that 100 points are 10 pips in my case, because my broker gives me 5 digits in the quotation. So now the entry, the signal is 10 pips above the up fractal, and the short entry is 10 pips below the down fractal. But I can set here also negative value. It will act in the opposite way. When the value is negative, the long signal will be 10 points, 100 points below the upper level, the entry level, and the short entry will be 100 points above the low entry level. Let's see. Here the signal for the long entry is here, but the actual signal is 100 points below that. And for short position, the short entry is here on that line here, but the actual signal is 100 points above, because the shift is negative. We have also horizontal shift, but the horizontal shift is very different than the vertical shift. The horizontal shift first is measured in bars, and second, it moves the indicator. It moves the whole indicator. It doesn't move the entry price or the entry point as the vertical shift. let's see horizontal shift. Let's go to the moving average indicator. And what we have, simple moving average calculated on the close price with period of 14. And the default shift is 0. This is the horizontal shift and it is represented in bars. We can change the shift from 0 to 200 points. Okay, let's compare that with another moving average. This is that moving average is with the same parameters, but I will set here horizontal shift 3 bars. Let's see the chart. These are the two moving averages. This is the first with the shift 0, and this is the second with shift 3. We see that peak here is for that moving average is move with the 3 bars ahead. This is actually the horizontal shift. The next is a level. What is a level? Levels are used in some indicators. We set an indicator value as a level. These levels are in the range of indicators, and they are taken into account only for specific application rules, for specific logic. For example, let's take RSI indicator. We know that the RSI indicator changes from 0 to 100. Let's accept that and go to the chart. This is the RSI indicator. It can change from 0 to 100, and the line is 50. This is the value of the indicator. How I can use that indicator, RSI? For example, let's enter long when the indicator is higher than 70. How can I do that? I'm going to use that level parameter. I'll set here 70, and I'll set RSI is higher than the level line. So when the logic rule contains the level, this level is taken into account. When I'm changing the level, you see that the backtest is changed. Let's be like that, for example. But when the logic rule is different, for example, when RSI rises, here the level is not taken into account. I can change that parameter, but the backtest is not changed. And how that works? Let's set RSI crosses the level line downward. No, I will set RSI crosses the level line upward, but I set here level 30. What does mean? You know, for the RSI that it's taught, it is taught that when the RSI is lower than 30, the asset is oversold, and we will search for opportunity to buy. And let's be like that. When the RSI was lower than 30 and it crosses the level line upward, we are going to buy. And the opposite rule will be automatically for short entries. When the RSI was higher than 70 and it goes below to 70, we are going to sell. Let's see how that works. Now when you select a level, a logic rule that uses a level, we see here the levels actually. And let's come here where I have deals. I will reduce the amount, the entry amount, to have more deals. And here I will select bar open. Because when I'm using moving average, actually I need two events in order to enter into a position. The price must be at a moving average, and exactly that bar, the RSI must cross the level line. But here I will set bar opening in order to have more signals. So we open at bar opening when RSI crosses the level line. Let's return here. And here the RSI is near to the 30, and when RSI crosses from below 30 to above 30, we have a buy signal. We have sell signals when RSI crosses from above 70 to below 70. We can see where we have short positions. Here, this is very small. So actually when RSI is above 70, it means that the asset is overbought. Let's for example here, the RSI was above 70, and when the RSI crosses below, it rises sell signal, and here we are selling. That will be all for that video. I will make another video where I will explain about advanced parameters here. Logical group, signal shift, signal repeat, indicator symbol, or longer time frames, and use previous bar value. These are important parameters. Please subscribe for our channel if you want to be notified for our new videos. We are making new videos almost every week. And if you like the video, please rate the videos. Thank you for watching. Bye bye.